The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello. Welcome to the COB on this Monday afternoon. I'm Nadine Blaney.
And I'm Tessa Celia. Thanks for joining us this afternoon.
Yeah, good afternoon too, because we've got this market really getting off to a good start this week. We've got the CBO Australia Index up by about 0.8% as the curtain comes down on it, and the S&P ASX 200 looking pretty strong as the last of the day's trades go through.
Around the same as well, 0.68% for now, waiting for the last of those trades to settle. As you said, Nadine, it looks a bit flat today. I was actually expecting a lot more movement from this morning, but here we go.
Well, I mean, there is quite a lot going on under the hood. So it's interesting, this result, even though we've got iron ore down at around 2-week lows, we've got Rio, we've got Fortescue weighing on the market overall. And that takes us nicely actually to our three themes, because while we're watching those rate sensitive sectors rise, look at the financials looking good.
Banking,
Goodman Group
utilities,
Goodman Group is up by about 2%. So looking strong. Because we did have that PCE, that inflation read in the US coming in. I mean, it was in line, but the market really ate it up anyways.
They did, and I think there was a bit of backtracking as well when Monday came along. I think a lot of reaction was on Friday, and then seeing that trickling down this week. Iron ore, the big one today.
Yeah, iron ore down around those 2-week lows. And we've got oil whipsawing in the wake of that OPEC Plus decision to extend those production cuts well into next year. They really don't want to give us a break at the Bowser. They really want to keep that price above that $80
but what's
mark.
interesting is they did kind of hint on putting it back, setting a date to putting back that production online at some point. So I think that created a bit of a movement. But yeah, overall, they're just keeping the cuts as is till next year.
Okay, let's go through some of these sectors that outperformed or underperformed. Let's start with the banks, shall we? All four of the big four banks pretty strong today, Tessa.
Yeah, look at that. All above, almost 2% for Westpac there, but all above 1%. Quite a good, strong start for the banking sector.
BHP, Rio, I mentioned. We've got Fortescue down, South 32 down, Rio Tinto down. BHP, just a bit of relief, I suppose, there. It's a little bit more diversified than, say, Rio Tinto, Fortescue, that are so leveraged to iron ore.
And looking at healthcare now, we've got, it's a bit of a red day there. CSL down almost 1%. The only green I see there is Ansell. So Cochlear, Ramsay Healthcare, Sonic Healthcare there as well. We can look later on if it's as a sector, though overall I think we've seen a rise as well.
Okay, so 10 out of the 11 sectors looking all right. Let's roll with that. Let's get you across some of the news out today. Vulcan Energy, this is an interesting one. Australia's richest person, Gina Rinehart, increasing her stake in Vulcan Energy Resources. So it looks as if, just putting money into that company to get this German project. It's supposed to be carbon neutral or carbon...
I think it's carbon zero.
Zero carbon lithium
project.
production?
Yeah, and I think so. Apart from Rinehart, you've got two other companies putting in money. So I think they raised a total of 40 billion, if I'm not mistaken, for that... for that project.
Yeah, okay. Fletcher Building. So this is a company that's been a bit beleaguered lately, as you know, but it has secured more favorable terms for its debt. So the next material debt maturity is now in 2027 and $250 million in May 2029. So extending a syndicated debt facility there and amending its covenant terms. So, making a bit of progress there.
Yeah, and another one on the list for today's a bit of M&A activity. We see APM Human Resources. They're set to be bought out by Chicago's Madison Dearborn Partners for about $145 per share there.
Yeah, that's been a troubling one since its IPO. Okay, Mineral Resources and Galileo Mining actually did well today with MinRes acquiring or could potentially acquire up to 30% of its stake in the Norseman project.
We will have the CEO of Galileo Mining tomorrow. So we'll talk to him about that. All right.
And Lovisa.
Our stock of the day, that is the worst performing of the sector. Look at that, because of the changes at the top, right, Nadine? I think the market reacting to that. But it is a, overall a well-loved stock. So it's interesting to see it reacting negatively to today's announcement that you will have this Victor Herrera replaced by a new CEO there.
Yeah, he's the current managing director
Cheston.
of Smiggle.
Yeah.
Smiggle. And so we've seen Premier Investments down on the day as well. In fact, Lovisa was the stock of the day. Jonathan Takadina from MPC Markets and Mathan Sundaram from Deep Data Analytics gave us their take.
Where it's been trading for most of the year, this is kind of like near the bottom of the range. So it's kind of like being stuck within that range and it's just near the bottom. So it hasn't broken down to further prices where I would say that the uptrend's actually broken.
Right.
So I see it as an opportunity to buy. Looking at the actual news itself, the new CEO is highly incentivized. Maintains EBITDA growth of 18%. He gets like a 200 grand bonus, which is not much. But if he gets it up to 30% and highly incentivized, he gets a 100% bonus. So
right.
I think with that kind of structure in place, he's incentivized to keep growing the company, and I still maintain that.
It's a market darling. There's zero shorts in it, right? It's all been squeezed out. So the problem here is everyone who loves it is there. Who wants to pay that multiple is there. To get the marginal buyer, I think you need it to come back a bit more to get the marginal buyer saying, I'm willing to take the risk. So going into, after this result, I think it remains probably in the dog box till the result season because people would want to see the number. Is management change being flagged as potential slowdown risk coming?
So we'll leave that there. Let's get to the bigger picture. We've got Kyle Rada from Capital.com joining us for the COB. Hey, Kyle, nice to see you there. Boy, that was a really steady afternoon period. Where was the action today? Was it low volumes?
I haven't checked on the volumes within the ASX 200. I mean, we've seen a lot of positivity across the region in general. I mean, the Hang Seng's back up around 2%. Chinese equities are stronger as well. I think the Nikkei's extended its rally to almost close to 5% in the last few days. So we're seeing a really positive start to the new month. I get the sense that it's a bit of a reaction, a delayed reaction, if you will, to some of the PCE index data on Friday night. I mean, it wasn't a considerable beat, if you will, or didn't come in much weaker than expected. Only really on that month-on-month figure, but it did seem to have a bit of an impact on the timing, the number of cuts expected at the margins from the Fed this year. So it seems that that's really what's underpinning maybe this kind of positivity that's manifesting obviously in cash equities here, but looks likely to sort of manifest in overseas markets as well. But otherwise, just looking at that kind of intraday chart before, remarkably little movement throughout the session, notwithstanding, again, this kind of really positive backdrop in Asia that we've seen to start the week.
Yeah, and Kyle, one of the data points that we had today is PMIs, of course. So we had the Australian one this morning, so that had a marginal contraction. You had China with a bit more positive one with the Caixin one. And I know that you're looking forward to the US data. What are you watching out for in that regard, and would that be market moving for you?
Yeah, I think it will be. I mean, more or less we'll be looking mostly towards the back end of the week, obviously, with some of this employment data coming out of the States. But the first thing to really check in on, obviously, is this ISM manufacturing survey. And the significance is kind of twofold. First of all, there are signs that economic momentum across the globe is reversing, at least when it comes to the business side of the equation, and that we're seeing this kind of very slow turnaround in manufacturing activity, which will be very interesting to kind of gauge as to where it sits currently in the US economy or in the US context, just because it would seem that it could be signaling something of a pickup in economic growth, obviously being a bit of a forward-looking indicator there of GDP. The second side of that, and it does tie into what we'll potentially see in the headline number of the survey, is that over the last few months, we've seen that kind of price sub-index with the ISM manufacturing survey picking up and starting to signal, again, as a bit of a forward-looking indicator, inflationary pressures that are either coming down the line or, if nothing else, showing that this kind of trend lower in prices has kind of stalled, which I think we'll also get, obviously, the ISM services PMI in the next coming days after the manufacturing number, which will be also important from that perspective, perspective, arguably more important from that perspective, to get a gauge on what's happening in kind of prices in the services sector. So we'll see how it comes out. There is expected that it'll be a modest contractionary number, so sub 50 tonight for that ISM manufacturing figure, but it has surprised to the upside over the last few months. It is trending very modestly higher, and again, that price sub-index is also following that headline number, which, again, will sort of inform expectations around the Fed's potential ability to cut interest rates this year. And if it continues that kind of trend, it'll potentially sort of throw cold water on the notion that the Fed is in the position to cut rates, and that, maybe this higher for longer narrative needs to prevail.
Okay, so yeah, we're data dependent as usual. Now, OPEC Plus, I heard the meeting went for about 4 hours, which by OPEC Plus meeting standards is quite quick, even though we've got the extension of these production cuts. So what do you make of the price action in oil in the wake of that?
Yeah, it was a bit choppy today. It was a bit choppy last week as well. We had some pretty significant sort of one-day moves, which were sort of unwound going into the meeting. The kind of takeaways, I think, were threefold. First, clearly we saw production cuts extended into 2025, which on the surface is supportive of the market and has more or less been implemented because of some of these fears around tepid demand out of China, as well as the ongoing impacts of tight monetary policy around the world. But as you were alluding to before, just at the start of the show, there's the element that a timeline has been given for when production cuts may be reversed, and the markets can then subsequently provide start to price in a world where supply is at the margins a little less restrictive. And the other interesting element too is that come September or October, some of the suspended output on some of the members within the cartel who have had their production reduced more or less to try and make sure volumes remain low, and that the output targets have been sort of complied with, will be reduced, which means that some marginal players there that have been rather frustrated for quite some time by the fact that again their export volumes have been reduced, and in fact their kind of fiscal situations have been severely impacted by the fact that even though prices are higher, their volumes are lower. They're going to get some of that relief there, which the margins could mean that there's a bit of extra supply washing around the market in a few months' time, which I think is something that the markets are taking into consideration around this event as well. So the long and the short of it is a few push and pull factors there for global oil supply over the next, say, 6 to 12 months. And we've seen this really choppy price action in oil as a result today, where West Texas around $77. It was slightly above that for a little while. It slipped below there once again. And I think, again, it's in negative territory, but really, really choppy.
Yeah, and Kyle, I just want to get your thoughts on, you were talking about market pricing in Fed cuts and what central banks will do. It's one of the analysts that went on ausbiz, I actually can't remember who, but he said, he was talking about the ripple effects of central bank movements. Do you agree with that, or are we all insulated with our data-dependent decisions, as they always say?
It still remains a really significant, story, and I think it remains the most important part of the story at the moment is effectively gauging when the Fed eases policy. And I think if we look over the last, week or so in terms of the rhetoric that's coming out of Fed speakers, you're starting to hear, Waller talking about where R-star is again. I think Williams was talking about, kind of searching for evidence as to whether policy is sufficiently restrictive. And it might have been Williams as well who even used the phrase that we should move away from higher for longer to higher for as long as necessary, or something of that nature, effectively saying that, maybe policy is, only just in restrictive territory and is going to need to remain there longer to, tighten financial conditions sufficiently enough to get inflation back to target. Because, of course, we are still seeing that kind of evidence, at least in some data points, that there's a bit of a slowing in the disinflationary process. We saw that in Australia last week, for example. And that maybe a little bit more needs to be done, even if it's just through rhetoric, to get inflation back to target. But again, before, as we alluded to before, it's very, very data dependent at the moment. This jobs data at the end of the week will be crucial, especially that sort of wages component that will come through there. Even on top of that too, that's a very US-centric conversation. We're going to have a really fascinating meeting from the ECB at the end of the week too, because they for a long time have guided that they expect to cut rates at this particular meeting. But recent data has, probably thrown cold water on those expectations. There's that notion that the ECB may have painted themselves in the wall. painted themselves into a corner because they weren't data dependent enough. So obviously really complex. It remains the main game in town, trying to estimate when the Fed in particular, but other central banks can start easing policy. And there's a great deal of uncertainty about whether policy is sufficiently restrictive and whether some of the trends in the data will continue or they can become increasingly murky. And obviously that will lead to sort of increased volatility as that kind of policy uncertainty has to get sort of discounted into the market.
All right, you following Roaring Kitty, GME? We in for a wild night?
We could be. We genuinely are. We saw obviously the Uno card before, and then the post on
Reddit, I think
X,
it was. Yeah.
Twitter, whatever it was it ended up there. Reddit initially about his huge position, and there's a bit of a grey market that you can follow out there that I was just told before that gives a bit of an indicative out of hours pricing on US equities, like up 19% after that post. So it could get a little hairy. We have to worry about it because meme stocks can be either a blessing or a curse for when we're trying to manage risk. So keep an eye out. Could be nothing. Or it could be something. A piece of trivia, if the stock goes to 100, apparently he cracks $1 billion in terms of his position. So we'll wait and see. Maybe Roaring Kitty will be, sort of a Roaring Kitty billionaire in 24 hours, 48 hours time.
We will see. We've got actually the image that he put up. It was, if you recognize it, you would if you have kids. It's an Uno card. It's the green reverse back to you. So really trying to stick it to Wall Street. Do we have it? I put it in the rundown. Yeah, there you go. So that was probably about 5 hours ago now, and Robinhood apparently has stopped trading GME as well in the 24-hour market. So yeah, fun times. Netflix making another documentary. Will be part 2, no doubt, Kyle. Should wait for that one. Thanks for today.
Thank you.
Thanks as always.
See ya. Kyle Rutta from capital.com. If this makes no sense to you, just go online and do a bit of research. But pretty entertaining, I guess, from where I sit, but I don't have any skin in the game. All right, let's go to market leaders and laggers. Here's the leaders. Strike Energy, really good drilling results coming through, sending the share price higher.
And Coronado, I think they're expecting to open one of the complexes, and they don't expect to have any impact on their financials, and you see them gaining up 5.6% there.
Yeah, sadly that was after an incident at one of their mines. No news with Helios and Magellan, and we've already detailed Fletcher Building, so that's the handful of winners that we took a look at. And elsewhere, Lovisa, Red 5, Niren, Silver Lake Resources, and Premier Investments. So you can see top and bottom of that list sort of completes the story there.
Yeah. All right. So what about on the smaller end of the market? We've got Vulcan Energy at the top there with just over 12%, Fluence about 12% as well, Race Ecology, Aspire Mining, and Step One.
There you go. Flip side to that, though, we've got Camplify down by 13% and Catapult. We had them on the program just last week, giving back some of that gain that they made in the wake of their results, down by 7.5%. So tonight, watch GameStop with much interest, but we can also talk about the ISM manufacturing PMI that Kyle was detailing. We've got construction spending in the US. The Westpac economists say it will remain lackluster because we've got these high financing costs, of course. And then we get a final estimate as well to the May's S&P Global Manufacturing PMI.
And for tomorrow, well, we will have some local data out, a current account and ANZ job ads, and keeping an eye on Japan as well. Monetary base out tomorrow, and retail sales for the UK.
Okay, so that's a little, it doesn't get sort of exciting here on the economic front until later in the week when we get GDP, but
on Wednesday. How did the market do? So let's have a final check. Oh, there you go, just up 0.8% on the CIBO 200, and the ASX around the same as well. 10 of the 11 sectors in the green today. So ASX is 0.77% up.
Yep. So around the region, the Nikkei closed more than a percentage point higher. The Hang Seng is up by more than 2%. It's going really well. Although mainland Chinese markets are lower. We had New Zealand actually closed for a holiday today. We will be off next Monday,
We will be, yes.
King's birthday. I've got to get my head around that. And just looking at E-minis in the States, we've got S&P 500 and NASDAQ E-minis looking pretty positive at this stage of the game.
All right. Well, that wraps it up for a good Monday, I think.
Yeah, I think so. Yeah. We'll take it. And we'll look forward to seeing you tomorrow morning. Please catch up with everything online, ausbiz.com.au.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense. Be better!
Still fine with it.
Use your racket! He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil? He's fine with it! Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.